All right, so it's that time again. Big bank earnings week. And, while the usual giants always seem to soak up all the oxygen, this time around, well, something pretty interesting happened.
And this quote, it just nails it. It perfectly captures what we're going to break down today. Because this quarter, the real story, the most compelling drama, it didn't come from the titans of Wall Street. It came from the so-called supporting cast.
So who are we talking about? 3 names you need to know: Truist, Fifth Third, and Ally. Each one of them just put out an earnings report that's, well, it's making some serious waves and signaling a really interesting shift in the whole banking world. Let's get into it.
Okay, first up, Truist Financial. Now, the market has been full of nerves, right? Everyone's kind of on edge about interest rates, the economy, all that noise. So what does Truist do? They decided to cut right through it and make a loud, clear statement with their cash.
And when I say loud, I mean $1.8 billion returned to shareholders in one single quarter. In this kind of environment, that's more than just a number, it's a massive flex. It's them shouting from the rooftops that they are stable and they are focused on their investors.
And you know what? They can back it up. This isn't just confidence, it's built on a rock-solid quarter. They didn't just meet expectations, they smashed them with a 9% earnings beat. Net income jumped 25%. And that key metric, ROCE, basically how good they are at making money for their owners, is up big time. This is just clean, solid execution.
Now look, it wasn't a flawless victory. They did have to dial back their forecast for net interest income a little bit, which is a real headwind for all banks right now. But honestly, when you stack that one small issue up against these killer earnings and that huge capital return, it's pretty clear which story is the real one here.
All right, let's shift gears to our second powerhouse, Fifth Third. Their story is totally different. It's all about bold strategy, aggressive growth. They made this huge bet acquiring Comerica and, man, is it already paying off. The impact was pretty much immediate. Boom, just like that, Fifth Third jumped into the big leagues, becoming the 9th largest bank in the entire country. And that's not just about size for size's sake, it's about gaining real scale and muscle in the market.
And you can see that muscle right here on the top line. A 33% jump in revenue year over year. Companies promise this kind of explosive growth from acquisitions all the time, but it almost never happens this fast. It's just a huge sign that this deal is working.
And this isn't just luck. They have a playbook and they are running it perfectly. They've got the whole integration mapped out step by step. The tech conversion is on track and they've got their eyes on some absolutely massive cost savings by the end of the year. This is just competence in action.
And I just love this detail. The CEO, Tim Spence, is personally out there visiting the new branches every single week. That's the kind of hands-on leadership that makes or breaks a deal this big. It's all about getting the culture right and making sure everyone feels like they're on the same team.
Okay, that brings us to our final story. And honestly, this one might be the most dramatic of them all. Let's talk about Ally Financial. Because just 1 year ago, they were in a really tough spot. People had serious questions about their core business. But their latest quarter? Wow, it is an incredible comeback story.
The numbers here tell the whole tale. First quarter last year, they lost over $250 million. This year, they made almost $300 million. That's a $500 million swing in just 12 months. Just a stunning reversal of fortune. And the most important thing to see here is that this wasn't some one-time lucky break. It has been a steady, deliberate march back to health. For 5 straight quarters now, things have been getting better and better. This is a durable, sustained trend of them getting their house in order.
And the proof is everywhere you look. Earnings per share are up 90%. Profitability metrics are soaring. The credit issues they had are healing. And maybe most importantly, the new business they're writing is coming in at better margins. This is a genuine firing on all cylinders turnaround.
So when you take a step back and you look at all 3 of these stories together, Truist's discipline, Fifth Third's empire building, and Ally's amazing comeback, you start to see a much bigger picture emerge about who's really driving the conversation in banking today.
So here's the scorecard. 3 different banks playing 3 different games, but they all came out winners. Truist proved that strong execution and rewarding your owners is a powerful strategy. Fifth Third showed that a big, bold deal can create enormous value if you do it right. And Ally just reminded everyone what a real, honest-to-goodness recovery looks like. Which really just leaves us with this final question. For years, we've thought of these firms as playing second fiddle, right? They were always in the shadow of the Wall Street giants. But after a quarter like this, you have to wonder, are they still the supporting cast?
Or are we watching them step up to become the new main characters of the American banking story? It sure is starting to look that way.